Good morning, everyone. Good evening, everyone. Good afternoon, everyone. Nice to see you all again. Please welcome to session 9 of MOOC 11, Digital Currency and Financial Institutions. We have a reasonable set of questions. I'm going to go through them through the existing questions, and then if we get through them and there are other questions in the group discussion, we'll answer those as well. So let me start with the most aggressive question. Most ICOs are not mature for blockchain development or are scams, right? This is an example of a leading question. I think the way to think about this is let's separate ICO as a concept from the specific ICOs that were specifically done in the last 12 to 24 months. ICO as a concept is extremely interesting. It is something that, despite all the negative press that happened, it's a model that we haven't really seen before. And what do I mean by a model that we haven't really seen before? It is global, instantaneous, crowdfunding. It's probably the most relevant framework to look at it, of various ideas and projects. Now you might say, well, is it crowdfunding or is it more like a sale of securities? It might, legally speaking, look more like a sale of securities in terms of the structure of what was done. But in terms of the types of projects that were ICO'd, the maturity of the projects that were ICO'd, the types of people who are investing in these projects, to me, it looks more like crowdfunding. And the projects were very early, very immature. People that were primarily investing were primarily retail investors, not necessarily big, sophisticated institutions, right? So if I think to myself, well, what's an IPO? Who does an IPO? It's a big, quite mature company. It's represented by a big, fancy investment bank. The people who are buying these securities are, yes, to some degree, retail investors, but that's not primarily how an IPO is done. The underwriter goes and visits a variety of institutional investors, sophisticated investors who have large amounts of capital, and they kind of decide, see what the market demand is, who's going to be interested in buying, at what price they're going to be interested in buying, to sort out where they'll bring this company public. And there's always exceptions. Google run a auction and so on, but Lyft, which is the IPO of the month, is doing it the traditional way. So what's crowdfunding in the conventional sense? Well, I have this idea, and at this stage it's an idea. It's not fully baked. It certainly doesn't have a big institutional organization behind it running it. It's just a concept. And who tends to invest in these crowdfunding opportunities, these Kickstarter-like opportunities? Well, enthusiasts from around the world who are doing it partially for non-economic reasons, I believe. Partially for economic reasons, partially for non-economic reasons. So in the essence of it, in terms of the maturity of the projects and the type of people sending money to the projects, it looks more like crowdfunding. Now, you're going to say, well, crowdfunding is usually for a product, and you get, I don't know, a sous vide out of it. And if you invest early, you might get the sous vide for a lower price than the person who gets the sous vide later. And so you're getting a tangible good, and the risk you're taking is that ultimately the team is not going to deliver that tangible good, or it's not going to be what you expect, and you're taking the normal risk that you take when you buy a product that will not fulfill all your worldly and cosmopolitan desires as you would have hoped. The ICOs were not primarily that way, though some tried to be that way, right? Some said, well, I'm issuing a utility token. And with this utility token, you'll be able to do something with it. And so those were even trying to head in that direction, that you're effectively pre-purchasing a product. And then others looked an awful lot like securities. And certainly a lot of people who invested in ICOs, if not most people who invested in ICOs, thought they were investing in something where they would make money out of the transaction. Now, so let's think about how the regulators kind of came back and looked at tokens and what seems to be the emerging consensus on tokens in ICOs. They're saying there are payment tokens, and those are decentralized. There's no necessary expectation that there's some profit coming from it. They're not tied to a specific product or service. And there's only a handful of those. Bitcoin is clearly one. Maybe Ethereum might be. We're not so sure about Ripple. This kind of seems to be the regulatory view. And those are payment tokens. And payment tokens, we don't think of them as a securities offering. We think of it as something closer to a currency, something closer to a money, something closer to, you don't typically get, if I want to go pick up some Hong Kong dollars, there's no one who's in charge, who's the promoter, who's trying to induce me to pick up some Hong Kong dollars, and a Securities and Exchange Commission isn't going to come protect me. The next bucket are utility tokens. You buy this token, you will be able to gamble on our platform or get frequent flyer points on our platform or what have you. Again, those where they're saying it's strictly for a non-financial return, and what the SEC is heading towards is it needs to be up and running by the time before you offer it. But those, again, not securities. And that's something like a gift certificate, like you're buying a gift certificate from the company. And then there are a bunch of ICOs that, even though they tried to hide it, or in some cases didn't try to hide it, were effectively saying, I'm selling you something that feels like equity in this transaction, feels like a security, feels like something that there is a common enterprise and there is a expectation that you will gain from it economically. And I think to nobody's surprise, most of the scammy stuff fell into this third category. And certainly, there was an awful lot of scammy ICOs. Now, I want to reiterate at this point, the scammy ICOs is one thing. The process of an ICO is super interesting. Like, you saw a hint in the ICO boom of a decentralized financial future. You saw a hint that new ideas might not necessarily be funded in the future by going to an accelerator and then going to a venture capital firm in Silicon Valley, and then going to a different type of venture capital firm in Silicon Valley, and then going to a different type of venture capital firm in Silicon Valley, and then maybe a big asset manager will invest, and then you'll go public, right? And this is a process that is mature, it works, it has better safeguards against outright frauds than ICOs have, but that's an ecosystem that's been built over 80 years. Whereas ICOs, you saw something different. You saw that there is global demand across a variety of price points, let's call it, to fund new ideas. Now, someone might say, people are very dismissive. It's because they were retail and they don't know and they were expecting unrealistic things. And that all may be true. But a decade ago, people could still be like that. And there was no way to physically execute this type of procedure. There was no way, if it was 2008, and I thought to myself, oh, I would like people in quantities ranging from 10 cents to $10 million to invest on a pro rata basis on some type of token, which represents some type of security interest, which is backed by some type of idea, and I'm going to come and announce it today, and then within 2 days, people from around the world, who I may not even know who they are going to finance this. That's new. That didn't exist. You could not do that in 2008. Like I just don't see the mechanism by which you would do that. So I think that's new. That's interesting. It's real. And then the question is going to be, how does that mature and start building in some of the protections and sensible approaches that protect people who put their money in these things? So with that part aside, I think it's a genuine innovation. Let's see what actually happened during the ICO boom. Well, what actually happened is very simple. People realized that you could take an idea that if you said, I have this plan to provide veterinary services on the blockchain, and my whole plan consists of me, my friend, a PDF, and we have done absolutely nothing. And if I go to Silicon Valley and try to get funding, my most likely outcome is I will get zero funding at all. And my best outcome is going to be I will get a little bit of funding at a very low valuation because I haven't done very much. And that's what would happen if I do it the conventional way. But because everyone is now super, super excited about ICOs and not thinking too hard about it, if I take the exact same dumb idea and say it's an ICO on the blockchain, people for some inconceivable reason are going to give me $20 million with no expectations for me to try and implement this idea. So when free money is raining down from heaven, some people are going to be opportunistic about it. And here's what I believe the spectrum of activities of ICOs actually entailed. There were some, a small percentage, that were reasonable propositions with reasonable teams that have the normal commercial risk of working or not working. Definitely a minority. There were some that the team was just naive. They might have thought that they genuinely were going to succeed in putting veterinary services on the blockchain. And in the traditional world, they'd go to Silicon Valley or whichever arbitrary Silicon Valley they'd go to and would have been told no, and would have been beat up by people who rightly or wrongly had a more cynical view about the likelihood of this working, and would have brought them back to reality or crushed their to-be successful dreams, depending on what framework you look at. And those teams, and I met some people on those teams, I think did not have bad intentions. They were often young and naive, and said, no, I'm going to do this, and it's a good idea. And look, people support the idea because they gave me a lot of money, so now I have to do it. And they might mean very, very well and then actually won't succeed. But they meant well. I think the next bucket were a little bit more sophisticated. They understood, they still thought like they had a reasonable idea, but they understood you could get off-market type financing. Off-market type financing with this model. That if you took the same idea in Silicon Valley, they'll give you $2 million at a $5 million pre-money valuation. And if you take the exact same idea through an ICO, you'll get like $20 million on non-dilutive financing. And so these people are a little bit more savvy and say, oh, I like this idea. Let me grab it. I still am going to try and build the business. But this is manna from heaven. Let's go get it. Those are a little bit more cynical. And then there was a third bucket that said, oh, wait, people are going to give other people $20 million with no recourse because there's a white paper? Well, I am going to then create a white paper that I do not believe in whatsoever. I'm going to put a team that doesn't actually believe in the opportunity whatsoever. And I am going to opportunistically try and look like one of these other companies that are trying to do it for real and might just be naive about their likelihood of success. I know it's not going to work. I don't expect it's going to work, but let me collect the money. And, in the worst cases of these, I say, okay, I got $20 million and then spend $1 million pretending to build the system that I'm going to build. And now I have $19 million and maybe I'll buy a car or go on a vacation or pay myself a big salary or what have you. And those are the ones that I would say are scams. All right, so I put it into 4 buckets. Bucket 1, well thought out projects that made sense to ICO. Bucket 2, not well thought out projects, but where the teams were perhaps naive enough to not realize they're not well thought out. Bucket 3, projects that were still meant to be a real company, and people said, oh, this is a much better financing model, and let's go for it. And bucket 4, things that were designed solely for the purpose of extracting investor money in an ICO and then not taking any further actions, or not substantively taking any further actions. I'm not willing to say the first 3 are scams. I am willing to say the 4th is a scam. I am willing to say that numbers 2 and 3, most investors will lose their money. I am willing to say even bucket 1, most investors are going to lose their money, because even in traditional startups with all the checks and balances that exist, startups are hard. And the default case, the median case, the mode case, the average case of a startup is that it fails. And so even the ones that were like legitimately good ideas from legitimate teams have a high chance of failure. So you have a high chance of failure in the first bucket. You have an even higher in the second and third, and you have a certain chance of failure in the fourth. And so a lot of money will have been burnt in the ICO bubble. A lot of people will have ended up losing money in the ICO bubble. And it is a symptom of, here's a new exciting bubble, hot area, lots of free or practically free capital is sloshing around. And when that happens, it normally is the case that someone is going to, or someone, and since this is a global industry and everyone can go for it globally simultaneously, across the world, plenty of someones will have, plenty of someones will go for it to take advantage of it. There's another nuance that I think is real. And that nuance is the following. If you are a serious entrepreneur, if you're a sophisticated executive, you would look at this ICO scenario and say, it's not clear if these people are doing securities offerings. It's not clear if they need to register with the SEC or whatever relevant SEC, and it's not clear what the rules of the game are. So if you are a serious executive and you see this scenario, and you're worried that later the regulators will come start chasing you around, you're going to hold back. You're not going to go into this space yet. I can't tell you how many times people told me the University of Nicosia should do an ICO during that period. And every time I said, thank you very much, but we're not going to do this. So the people who are conscientious and serious about their job will be scared of this unclear regulatory environment. The people who are not scared about the unclear regulatory environment are the ones who are less conscientious. And so in addition to the normal thing that if there's an opportunity, opportunistic people will try and take advantage of the opportunity, you had a lemon problem here. You had a self-selection problem. You had a problem that the type of person that would be attracted to doing an ICO during that environment is a less legally conscientious person. And so obviously that drives down the average quality of ICOs. And then it makes people conclude, as in this question of like, oh, well, it's not mature and there's a bunch of scams and what have you. And effectively, that is what happened. The percentages of goofy IPOs in categories 2, 3, and 4 was very high. But I think that will change over time. I think the platforms will become more mature and obvious how you do it. I believe you will see clearer regulation and rules of the road of what you have to do for each type of ICO. And as you have that, you'll see more serious operations ICO, more serious entrepreneurs ICO, more conscientious entrepreneurs ICO, and then the average quality of ICO will go up over time. So I think that's my comprehensive take on this question. Okay. Someone asks, should I choose one or multiple exchanges to register with? I am not going to give a point of view on that question because it depends on what you're trying to do. Do you want to register with an exchange because you want to buy a certain token? Are you registering with an exchange because effectively you want to store your coins there? Are you registering with an exchange because you want to be trading? Are you registering for an exchange to buy a wide variety of tokens? From which country are you registering? And so on and so forth. Let's take the most simple example. If you've thought to yourself, I would like to buy 3 Bitcoins and put them aside and forget them because I want to take a bet on Bitcoin. This is not investment advice, as always. Then I don't think you need to register with multiple exchanges. I think you can register with one exchange. You can buy 3 Bitcoins. You can decide where you want to store them. Most advices don't store large amounts on the exchanges. But the alternatives, hardware wallets or custodial wallets just for storage, also have a learning curve of their own to do right. So there's work that needs to be done there as well. In that case, I don't know that you would necessarily need, you're taking 3 Bitcoins, you're forgetting them for the next 10 years. You want them in case of emergency, quote unquote. You want an option on if this thing works, quote unquote. I don't know why you'd need exchanges, multiple exchanges. If, to take the other end of the spectrum, you wanted to be a super active trader across a dozen different tokens, and you're going to be doing technical analysis and arbitraging differences and buying and selling and moving things around, yeah, knock yourself out. You probably want as many exchanges as possible. There are definitely price discrepancies in this field. So I will raise a question mark on if that's likely to be a winning strategy, right? Like day trading cryptocurrency is non-trivial. Just like day trading small stocks is non-trivial. Just like day trading almost anything is for most people, and your mileage may vary. Your mileage may vary. Most people is a net losing proposition, but you might not be that person. So I think that's the spectrum, right? The person that's doing that might need multiple exchanges. The persons that are going to do something very simple can probably do it with one. And depending on your needs and your reason for doing things it will depend what you will take. Okay, which crypto service is the most mature and user-friendly to date? Wallets, exchanges, or merchant tools? Well, strictly speaking, from a maturity perspective, they're all fairly similar. They all started around similar times. So I guess user-friendly here, we're talking about the user interface, the user experience, how people experience them. I think if I had to guess, it's probably the big consumer-oriented exchanges, like Coinbase from a consumer perspective is pretty easy to use. I mean, yeah, you have to do your KYC and AML and all these things, but pretty straightforward UI, and it looks friendly and easy, and you press a button, you have Ethereum, and you press another button, you have dollars. And I mean, it's not as easy as Instagram, but it also is not super technically complicated. Say merchant accounts and wallets are a next level down. Some of the wallets get quite a bit more technical than the exchanges. And merchant accounts, merchant processing accounts are always a little bit more complicated, even in the traditional world, right? Like if you said, what's more complicated in the normal world, a bank account or a merchant credit card processing account? For sure, it's a merchant credit card processing account. Bank account's pretty straightforward. So I think that's where we are. We still have, I think, huge strides to take towards further user friendliness. Even on derivative type things, like think about taxation. If you have a bank account at Bank of America and it's a savings account, your interest that you're earning is probably calculated on a daily basis on the daily balance of your account. Imagine if you had to report this to the tax authorities and had to do the calculation yourself. This would be a nightmare. No one would get it right. No one would do it, and everyone would be totally confused. Fortunately, you don't have to do that, because a month after the tax year ends, Bank of America will send you a 1099-int, INT, short for interest. And that will conveniently tell you that you earned this much interest over the year. And we've also reported to the IRS for your convenience. And so when you put the amount of interest you've earned from this account on your tax return, it behooves you to put the same amount that we already told the IRS you've earned interest on. And that's a system that actually works well for everyone, because the IRS is happy it's getting reporting about the interest. The banks are in a position to calculate this with a few lines of code across millions of customers. And the customers don't have to do the calculations themselves and possibly get them wrong. And anyway, they'd be immensely annoying calculations to every single day of the year calculate your average balance and multiply an interest rate on it. Now, everyone say it works pretty well. People say, oh, no, but I don't want to pay taxes. You know, sure, nobody wants to pay taxes. Everyone would prefer that your interest is untaxed. But from the moment that it's taxed, and from the moment you have an effective tax authority that is going to chase you around and look for your taxes to be paid, if that's happening, then it actually makes sense that it makes sense for someone to calculate it for you. Now, compare this to the current state of cryptocurrency. There is no 1099-crypt. So if you have, to stick with the example, a Coinbase account, and you are buying and selling crypto over the year, and maybe you're even using it for payments, you have to treat each one of those as a realization and go calculate your cost basis and how much money you've earned or lost when you sold. And it's a big nuisance. And if 5 people try to calculate it for the exact same set of transactions, those 5 people will probably all calculate it in a different way. I think that's the reality. So even that's a part of user friendliness. If you told people, sure, you have this taxation system, then maybe someone will say, well, it'd be better if they weren't taxed on capital gains loss. You're right. It'd be better if there was an exemption. You're right. But whether there's an exemption of $2,000 or no exemption whatsoever, you still need to calculate what happened. And the right person to calculate what happened, probably Coinbase, not you. They're more likely to get it right than you are. And so these types of things I consider, but Coinbase doesn't have an obligation to calculate it, but also doesn't have a mechanism or the right, in quotes, to calculate it and send it. One of the Coin Center, the industry lobbying group, is actually lobbying to make this type of form because, excuse me, because they think it will help adoption. If you tell people, look, you're running in a exchange or a custodial wallet, we will calculate your taxes, your tax obligation, your taxable income or gains or losses for you to make your life easier. And I think that's extremely sensible. And I think these types of things, which have to do from beyond the basics, also need to happen. And those are part of the broader ecosystem maturing. I'll tick off that question. Okay. It seems that various providers are not in regulated markets. Service providers in crypto, such as wallets, may only be licensed in countries like Malta. If there is not going to be a coordination between regulators, perhaps in Europe, at the ECB level, do you think the industry will ever truly compete with the conventional system? Well, this is like 4 questions in one, and I have views on each of those questions. First of all, in most developed markets, most type of crypto financial services actually do have some regulatory obligations even from today. For example, in the United States, if you're running an exchange, someone will tell you it's a money service business or a money transmission business, and you have to apply the normal panoply of anti-money laundering and know your customer regulations. It's mandatory. And it's mandatory not because they passed specific legislation for this field, but because it's a principle-based legislation. They say, look, if you're doing this type of thing, it looks like this other type of thing. And this other type of thing, you have to meet these requirements. And so you guys also have to meet these requirements. So this already exists. I believe the KYC instructions already exist to some degree in Europe in the 5th anti-money laundering directive. In the 5th one, there is a provision for virtual currencies and how you need to apply AML and KYC. And yes, it needs to be transposed into national law or national directives or implemented at the national level, but it's an EU-wide directive. What is happening at the national level today is legislation about different types of service providers in the cryptocurrency space. So a service provider could be an exchange. A service provider could be a merchant processor. A service provider could be a custodial wallet. What regulations apply to what type of crypto business is something that is national specific today. It's an evolving area today. You will see some jurisdictions like Malta or Switzerland or Liechtenstein or maybe possibly by the end of the year, Cyprus, try and propose legislation sooner rather than later because they feel if they give a regulatory framework, it will help attract business to their country because you can resolve some of the regulatory uncertainty for them. Simultaneously, there's an ongoing exercise and discussion happening at the EU level, which will work on a longer cycle, that at the end of that, there will probably be some harmonization. But this is going to take a few years. We're still at the level of national regulators making national level legislation. The EU is talking about cross-EU principles. And over time, this will evolve. And I believe over time, if pick an arbitrarily long period of time, if you said 10 years from now, do I believe the regulations will be largely harmonized on this topic? Yeah, I think so. 1 year from now? No, I don't think so. So somewhere between 1 year and 10 years from now, I think there will be some meaningful harmonization. Now, when that harmonization exists, will it compete with a conventional system? Not sure. My general view about technology is it does not, its first and initial and best usage cases are not typically the things that the conventional system does well. It's the things that the conventional system does poorly. So if you said, will it do machine-to-machine transactions? Well, yeah, it probably does. Will it likely replace my checking account at the bank? No, less likely that this is what's going to happen. So this is, I think that's a completely separate question. For sure, if there are some harmonized legislative frameworks and regulatory clarity, it probably helps with adoption of some type of more mainstream usage cases. Probably does help with that. But I think new ideas always are at a little bit of a side angle to existing systems, and they don't tend to just outright replace existing systems by replacing what they were doing yesterday with what you're doing today. Like they don't say like, oh, banks used to do this yesterday, and now Bitcoin is just going to do what banks does. I don't think that's what happens. I think what happens is banks do X, and here's something that banks don't do very well, and for this specific thing, maybe Bitcoin does it better, and it builds from there. And then over time, that topic grows in importance, and then they start encroaching on more traditional things. Well, that's my view on this question. What would be our conclusions after the Quadriga incident? Our conclusions would be that Bitcoin and cryptocurrency in general provide endless story material for movies, books, novels, and so forth. And it has always been this way through its history. And the reason is that these public cryptocurrencies are decentralized digital cash that any arbitrary person, if they get their hands on them, can run away with. And so when now on our computer networks, in addition to files and information that you could get your hands on and then try to use them for a further profit, you don't have to do that anymore. You get your hands on Bitcoin or Ethereum or Zcash or whatever. You don't then have to take an extra step. You already have something that's valuable. You've picked up something digital and it's valuable. So this means there is an awful lot of energy spent by one set of people trying to get a hands of the tokens of others, and another set of people trying to prevent the former from getting their hands on them. And sometimes it's very confusing if you're talking about the former or the latter. This case is one of those cases. This case is a case where it's not totally clear who tried to take the cryptocurrency from whom. The official story is one view. There are at least several other unofficial points of view about what happened. And the whole thing, including the fact that someone passed away quite young, adds a whole other layer of complexity to this topic. Someone said, Andreas said I was having some connection problems. Can you hear me okay? Let me know in the comments, please. Okay, this says that I am potentially back. Okay, super. Thank you. So here where someone passed away, and someone young passed away, there's an even greater element of a serial thriller than you would have otherwise expected. So I don't know. I certainly don't have any personal view on if there was any malfeasance here, if there was malfeasance, by whom it was. Is the malfeasance cryptocurrency in nature? Is it death in nature? Who did it? Who was the bad guy? Who was the good guy? I have no idea. My immediate reaction is it looks complicated. My also immediate reaction is most of the people who lost their money here are probably not getting it back. It has the feeling of an episode where the money is gone. It's not clear who took it. It's not clear where they took it. It's not clear if it was gone before the episode actually happened. Right? There's one theory that the money was never in the cold reserves in the first place. So I don't think anyone knows who was not the person in charge. And so then what people are going to tell you, and I think with some good sense of like, don't leave too much money on exchanges. And then I would say, and this is definitely not official advice, because the second I say this, something will happen to disprove it. But in at least the last few years, the big episodes have happened at smaller exchanges. So Mt. Gox at the time was the biggest exchange in the world, and they got hacked or they got hacked. Nobody knows, right? But they were built before the wave of professional class exchanges were built. And when those got built, since those got built, I can't think of in like a major Western exchange, like the very upper tier, that they've had a hacking episode, though a lot of the second and third tier ones have. Now, this is not something that will change the general theory that if you have coins on an exchange, you don't actually have coins. What you are is an unsecured creditor of that exchange, and that exchange may go bankrupt, or they might lose your coins, or hackers may steal their coins, or the exchange might steal your coins, or they might do any number of other annoying things might happen, and then you don't effectively have your coins anymore. Of course, some of those things can happen even if you're storing your coins yourself, and you And if you store your coins yourself, those things could happen anyway. And if those things happen anyway, you're still kind of in trouble, and your money's probably gone. So it is. Yeah, I have a note here from Andreas Vlachos, which is a very classic note and a very classic crypto note. Not your keys, not your coins. This is true. This is definitely true. But people have succeeded in losing their coins even when they have their keys. So it's not like if you have your keys, then automatically you're not going to lose your coins. It's just you replace one set of risks with a different set of risks, which probably are lower, in fact, but they're lower assuming you do the work. So I think those were the questions that came in beforehand. Let me go to the live chat and see if there's anything we can cover there. Someone had asked, is Bitcoin a peer-to-peer electronic cash system? I think I'm being trolled a little bit there, so I'm not going to answer that question. Someone asked, could I sell BTC via my own blog? I would be careful if you're selling cryptocurrency in any type of organized manner, that depending on what country that you're in or what country the people that are buying from you are in, that you're not accidentally running some type of business that supposedly you should be regulated. So I certainly can't answer that question, because the answer to that question has to do with many, many factors, of which many of them are situation specific, and you can't tell from that question. And anyway, I wouldn't be qualified to answer these legal questions in every jurisdiction in the world. But my gut reaction is I would be careful. I wouldn't think that when people have gotten semi-professional in terms of buying and selling Bitcoins or other cryptocurrencies, there have been some court cases that have gone against them and say, yeah, you're kind of in the business of exchanging money, transmitting money, and therefore I am imposing on you the obligations that I would expect of someone who's in this business professionally. And you might say that's unfair, and that's probably right, but regulators might have a different view of what you're doing. And so I would, if you're exchanging some Bitcoins for a product or service, I think you're safe. If you're maybe on an individual basis, and none of this is legal advice, right? So let's just be clear about that. But if you're on an individual basis, you transferred one time some Bitcoins to your friend, they gave you some cash, you might have a tax obligation, but you're probably not a money transmitter. If you go out on your blog and say, hi, I'm open for business, I will exchange Bitcoins for dollars. Well, kind of starts to look like what an exchange does. And exchanges, I think it has been the view of almost all regulators that those need to be regulated businesses. And they have to comply with a bunch of relatively complex regulations of the type that banks have to comply with. And in that case, I'd be careful. So that's my gut reaction. Someone asked him, this is bordering on being tomorrow's question, the next session's question. Since cryptocurrencies are an internet thing, doesn't that mean it should be free for anyone to use for whatever reason they want? I mean, it's difficult to make laws for the internet. Well, I am old enough to remember this discussion about the internet itself. Back when this discussion first happened, it was about cyberspace and how cyberspace was on the internet, and the internet was not in one jurisdiction, and it was this place outside of time and space, and therefore laws, and it's a different jurisdiction, and all the laws of the land don't necessarily apply in the internet. And in fact, there's a bunch of things on the internet that are not well covered by laws, and so maybe there won't be laws about them. Well, the internet turned out to be super revolutionary in many ways and changed many, many things about many, many parts of the world. But one thing that did not happen was that the internet turned out to be a space independent of laws. Because what's the internet? The internet is a bunch of computers, right? It's a bunch of servers sitting in an air-conditioned room, which are connected to each other with internet connections from an internet service provider who is running a cable of some type to that room. And those servers have owners, and those owners are people. And just like the servers live in the physical world, the people live in the physical world. And from the point in time that the servers live in the physical world and the people live in the physical world, and a country has a police force and a legislative body, and the legislative body can pass laws, and the police force can come and find you and say, you're violating these laws, and I have a gun, and I have a jail cell, and I have a court, and I can hold you accountable for violating my laws. And I can hold you accountable through the very specific mechanism that I can apply the judicial system. And at the end of the line of the judicial system is the force of a gun and a jail cell and so on. Well, then it turns out that nation states are perfectly capable of applying laws to the internet. And when nation states do that, that means if their laws can be applied, then they will, in fact, make laws. And they'll make laws of different types, from kind of very generic and things you used to expect in the offline world to kind of more sophisticated internet-specific laws. And they are generally enforceable. And you can say, oh, but what about file sharing? And what about, yeah, sure. You can do some things on the margin where you're technically breaking the law. And maybe the volume of people breaking the law and the individual individual violation is small enough that they're not bothering with you. Or what effectively is happening is selective enforcement, that many people file share, and once in a while some random person gets in trouble for it, while most people don't. But I think these are exceptions to the rule, not the rule. I think the rule is that laws are enforceable in internet land, and even those exceptions are exceptions in the way that, like, speeding is an exception, right? Like, you might get a speeding ticket 3 times in a lifetime. If you're the average driver, are those the only times you were speeding? Probably not, right? You're probably over the speed limit hundreds of times in your lifetime, and those happen to be the times that the selective enforcement was against you. There's an old joke about, like, someone gets pulled over for speeding. It goes, oh, but officer, look at all these other people speeding. Why aren't you stopping them, giving them a ticket? It says, You were that person all the other times. All the other times you were the guy speeding that didn't get a ticket. This is the time you get the ticket. So I don't think anyone would argue that nation states can't effectively enforce speeding tickets, even if practically speaking they choose most of the time to not fine and give a ticket to every single person that's speeding, because if they did, it would be kind of like a colossal nightmare for everyone, right? Like you'd probably have to like stop 90% of the cars on a typical highway in a typical country, and you just don't have enough police officers, and you just don't have enough courts, and everyone's going to get very annoyed. And so what you do is you do just enough. That's the same bucket of kind of nuisance values. It's not like the crime of the century. It's not you've gone and murdered someone. You're speeding, and so okay, they are nuisance value crimes and nuisance value enforcement, and they do enough just to keep people on their toes and don't speed too much, right? So even the examples that people use of like, oh, well, it's not enforced and it can't be enforced with the internet, well, it probably can in most cases. Like you have to have very good operational security, very good network security if a nation state really wants to figure out what you're doing online and you want to do things online without them figuring out, it is very, very difficult. It is way beyond the capability levels, not of an average person, of an average technology sophisticated person. Like I'm pretty good with computers. My expectation that I can go do XYZ on the internet for any extended period of time, and a nation state wants to know what I'm doing, and I'm trying to hide it from them, and I will succeed ultimately at hiding from them, is zero. And actually zero. So I think for the foreseeable future, humans still live in physical form, and that physical form, by definition, is somewhere on Earth, in some country on Earth. And I don't think we have escaped into cyberspace, into the internet, into a world where the laws of man and the land don't apply anymore. I don't think that reflects the current reality. So with that, we're exactly at our ending point. Thank you, everyone, for the questions. Thank you, everyone, for participating as always. For those a little bit more locally to Cyprus, have a nice long weekend. For everyone else, have a nice regular-sized weekend. And I will see you all next week.